Anthony, you good? You ready? You get all your little information note graph things?
Seth, what the heck's going on?
What are you talking about?
What's this?
Oh, you mean Benedict?
Benedict?
Yeah. Oh, yeah. I've been feeling kind of off, and I don't know. Last week, I was just something came over me. I don't know.
Yeah, you were very strange last week.
Yeah. So, I went and saw a professional about it. I don't really want to get into it, but they recommended this emotional support coyote, Benedict. Are you allergic?
No.
Oh, okay.
He doesn't blink. Hello and welcome back to The Economy Lately. I'm Anthony Smith, Chief Economist here at FreightWaves. This is episode 18, and I'm, of course, joined by the one, the only South Turk.
Anthony, it's good to be back.
Yeah, man.
Back to normal.
You were acting a little bit strange last week.
Well, I'll tell you about that later. But yeah, 18, legal age.
Yeah, we made it. It's a benchmark here, and
mm-hmm.
It's nice to be back in Chattanooga. I had to take a quick trip to Portland, but it's good to be back.
Well, how was the great Northwest?
It was good. You wouldn't believe some of the stuff that's legal out there.
Oh, really?
I had a great time.
Yeah?
Yeah, it was fun.
Okay.
You can give a cop a citation in Portland?
Really?
Yeah.
Uh-huh.
It's legal out there.
What did you give any cops any citations?
No.
Oh, sure. Yeah.
No. I stayed far away. But it was a fun time, and
mm-hmm.
I highly recommend it. But no, let's get into the show.
Okay.
This is Economy Lately, and we have to jump into some of the most recent economic news, starting it off with a recent one that happened last week, and that is, of course, retail sales. So we did see that there was an increase of 0.3%, and there were some standouts here, but starting it off with the big downward movement that came from gas stations. No surprise here, especially after the previous CPI report. We saw that retail sales at gas stations dropped by 4.2%. Some of the standouts that were positive moving for this most recent retail sales report came from automotive production, which had an increase of 2.8%. And we also saw that food services were up 1.1%. One of the big areas that we do have to kind of note too is non-store retailers, which had a downward movement of 0.7%. You might be thinking that doesn't seem like a huge shift, but it is kind of meaningful when you think about it. So retail sales of non-store retailers, strange phrasing, but anyway, it has e-commerce impacts to it. So e-commerce has definitely been one of those areas that has been a mainstay in consumer activity. And when we start to see some downward movement here, and there's still inflation, that is very telling. As I mentioned, inflation. These numbers for retail sales, not adjusted for inflation. So seeing that increase, definitely have to take some of that out of it because inflation is still very much a thing, especially at that food services and things like that, where we see a ongoing continuation of increases for food prices and food away from home when we look at the reports that came out from the CPI. The next big one that we have to get into is housing starts. And this one had quite the showing, up 12.2% for the month. And that is substantial. That's double-digit growth. And that is quite a spike here. We saw a lot of the activity happening in some of the South and the Midwest regions, but really a lot of the activity happened within the multifamily subcomponent of housing starts. Single family also had some positive contributions in some regions, but really overall, we did see a substantial rise for housing starts. But that's not to say that housing is back. No, because we also saw a 10% decline monthly movement for housing permits. And permits is going to be something that's indicative of future activity. You issue a permit, now the house is clear for construction, you can begin activity, you can break ground and build this house. It's a housing start. But downward movement of 10% means and signals that there is a downward movement in new home activity. Now, of course, Sal, you know what this means, right?
We should build a neighborhood.
We should build a neighborhood.
Out in the hills?
We should build a neighborhood.
Uh-huh. And it's like a community that you have to ride trains into.
You're right. We should build a community, but housing starts. The thing that we can pair with this, South, is Faux try.
Nah, you what the fuck?
Yeah.
I think you're out.
Faux
Drag
try.
me back in.
Yeah. We got faux try, ladies and gentlemen. You know I love to see it. And faux try did indeed tick up ever so slightly throughout this time of increase as well for housing starts. But there's not a pronounced rise here. There's not a sustained upward movement that would lead me to think that housing starts are back or that there's going to be a lot of momentum coming up here for the housing and construction industry. It seems like there's still going to be very much a slowdown here. And this adds on to the expectations of a slowdown when you take into account that the interest rates are starting to go up more and more and more. This also adds to increases in mortgages. We look at home builder sentiment, which is still down. The home purchasing sentiment index, or the HIPC, if you're hip, you can see on this chart. Hey, if you're nasty too, you can see on this chart that the home purchasing sentiment index is still very much down in the dumps. Unfortunately, a lot of folks sitting on the sidelines, but not you, South. You're getting in the game. That's impressive. You don't listen to what's cool or what's hip or what's popular, what's not popular. You're going to march to the beat of your own drum.
A full drum set.
So with interest rates, we spoke about expectations last week, and this week they were fully confirmed. We saw that Federal Chair Jerome Powell announced a 0.75% increase for interest rates, and the markets are reacting. And I think now they're starting to get the picture that he is looking to be serious with this fight against inflation. Of course, he said in Jackson Hole that he will not stop until the fight is done. A lot of folks are going to be a little bit concerned because this could mean that there's going to be some increases in the unemployment rate and that this could really hamper any type of semblance of a soft landing that a lot of people are hoping for. We're looking at the interest rate increases. This is going to have implications outside of freight and supply chain, as well as freight and the supply chain. We see that when interest rates usually go up, there's usually a decline in freight demand as well. When you're looking at what's going on in this economic environment, it's really adding to expectations that there's going to be ongoing interest rate increases as we continue to see semblances of strength in the job market. Although you and me and South and Barty Boy over here know that there are a lot of underlying trends in the jobs market that are a little bit concerning, especially with the slowing down in hiring that's already started, that the quit rates are starting to ease ever so slightly, and that the median household wage is now down 0.6% on a year-over-year basis. But we won't get into all that. All we need to know right now is that things aren't looking the best. And of course, credit card consumption is steadily increasing. And the more I think about it, the rougher it's looking for the last few months of the year going into 2023. South is going to get rough.
Okay, well, glad I bought a house, I guess.
Is this the first day of autumn?
I think so.
Kaylee Nix didn't say anything to me.
You didn't see her, you're in Portland. Giving cops citations or something. I don't know what hippies do.
Yeah, you're right. Yeah. Why would she tell me then? But anyway, I mean, I'm just excited to have this show back. I'm excited for episode 18, and I'm excited to see how the Fed tries to narrowly avoid economic collapse altogether. But this has been the economy lately, and this has been episode 18, and I hope the best for South here, and wish me luck with Barty Boy over here. We'll see you on the next episode.